Hello again, Roy.RealEstate here with Coldwell Banker Legacy in San Angelo. Today I want to talk with you about some don'ts. These are the things not to do during the home buying process. So, this doesn't apply to everybody. If you're paying cash for the home, then a lot of these things won't apply to you. But most of the stuff I want to talk about today is the things that people can do between the process of getting pre-approved and closing on the house. And some of these things can affect your credit rating, credit worthiness, your debt to income ratios, and some of these things, and then can keep you from possibly getting the house that you're trying to get. So when these things happen at the last minute, it's kind of a mess. So it's just more than anything, this is a warning. So if you're thinking about any of these things and sometimes you're in a situation that they just need to happen, that's actually maybe even more important than getting the house done. And that's fine. Just make sure at that time you want to talk to your loan officer and let them walk you through it and tell you the way you can do it in a way that's going to hurt you the least. So if you look at the lending process, basically what the lender does is they look at the amount of money you make, they look at the debts, the other debts you have, how much you have to pay every month to service those debts, and then they look at how much of your monthly income the house will be. The house, including some of the other costs, insurance, taxes, utilities, that kind of stuff. You want to know what percentage of your income that is. So when you get to looking about it, the things you don't want to change during this time frame are the things that will affect that. So one of the big factors they look at is a debt to income ratio. So anything that affects your debt, taking on more debt, for example, which will have a negative impact on your debt to income ratio and can make it where you no longer qualify for the house that you had qualified before. So be very, very cautious about taking on any new debt while you're in that home search process. And again, this until after closing is when it's critical. Once you've closed on the house, the loan has been given and extended, the money is there, then you can do what you need to do with these other things. But this is any time before that process when you're buying a home. So buying a new car, on a note, you can go buy a new car cash, it's not a problem. But buying a new car, even buying a TV or something, that you're making payments on can affect your debt to income enough that if you're right on the borderline, it can push you over. Some people want to celebrate their new house by buying new furniture or buying a new car or whatever, and then all those things are fine. So do your celebrating after all the papers are signed and you are the owner of the house, not while you're in the buying process. So again, that's the debt side. Anything that increases your indebtedness is going to affect that debt to income ratio. And if you're borderline, it can be a big factor. If you're not borderline, it's not that big a deal sometimes. But again, talk to your loan officer and be sure before you do it. The other thing that obviously affects your debt to income ratio is your income. So a job change, anything like that can be a big factor. If you've got a good long history with the employer you're at, that's one of the things that the lender looks at in their process of approval. And if something changes there, especially if it's voluntary on your part, then they'll take a step back and look at that again and reevaluate. And that's what you don't want to happen at this time. So don't make a large voluntary job change. Sometimes that's unavoidable, but just realize that it can affect your credit worthiness and your ability to get that loan to buy the house. So, and if your income goes up or down substantially, that causes them to kind of stop and take a look again as well. So hopefully not any major changes. Again, this is not the time to go be looking for a new job or anything like that, because they're just looking for a consistency. They don't want to know nothing's fixing to change. And that's one of the things. So again, most of these are just a heads up to things that, hey, if something happens, sometimes you're in a situation, you're in the process of buying a house and you have a car breakdown and it has to be replaced. And if you're in that situation, then that's, again, just a warning to go talk to your loan officer and ask them, what can I do? I got to get a car, so we can get to work or whatever. But I need to do it in such a way that it doesn't keep me from getting the house that we have under contract or we're shopping for and about to make an offer on or whatever. So just be aware of how these things can affect you. Again, the big things that the lenders are looking at is your debt to income ratio. So how much do you owe versus how much you make. They're going to look at your credit score, obviously. So anything that affects that credit score, getting a new credit card can affect your credit score negatively, and it can show as available debt that you could take, even though you may not have charged anything on it. So anything little like that, if you can avoid it during that time period, you always want to avoid it. Again, once the house is closed, then nothing matters. But anytime up between closing, because the lenders will re-verify these numbers, can right up until the day of closing. So be very, very cautious about that. Keep in touch with me on it if something like that happens, and I'll remind you at that time to get in touch with your loan originator and make sure that they're on board, that these things aren't going to hurt you, or if there's a different way to do them that hurts you less, that we can do that. So it keeps you from getting that big surprise of being told 3 days before you're fixing to move into your house that you no longer qualify for the loan because something changed. And that is a mess for everybody involved. It's bad for the seller. It's bad for you as a buyer. It's just a bad situation. So if we can avoid those things, that's going to be better for everybody involved. So got any questions, give me a call, 325-268-0775, Roy.RealEstate. Thank you.